Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Morning.
Happy Friday.
Good morning. Indeed.
Very good. Taking a look at the markets, Lawrence, we're seeing a lot of green candles today in the crypto markets. So I'm wondering what's behind this jump.
So a couple of things. Bitcoin, Coinbase had about Brian Armstrong went on Twitter to say that he was buying about $500 million worth of Bitcoin to put on their balance sheet. And going forward, they're going to put about 10% of their profits at Coinbase into crypto. That's, this past year, let's say there's about $2 billion or so in net income. That's a couple $100 million a year potentially. So that was that exciting thing. And then with Cardano, there's a lot of enthusiasm over Alonzo. And,
they have their Alonzo upgrade. They're going to have smart contracts. They're going to be a competitor to Ethereum, as they said they always would be. And they've been building partnerships in emerging markets like Ethiopia, other countries around the world. So a lot of enthusiasm from that country. Emily, what are you looking at?
Well, what's really interesting is this very controversial crypto tax provision that was part of the infrastructure bill that passed through the Senate is now moving on to the House. And you could say that this is a moment of peak regulatory uncertainty because the current language in the bill is considered very unfriendly to the crypto industry. We don't know if that's going to change next week, but apparently it doesn't really matter to the market because the market is booming. So I'm not sure how to interpret that. It could just mean that, even in the worst case scenario, if things don't go well in the U.S., the market will go on, but it's a little bit counterintuitive.
Mm-hmm. All right, and with that, let's check out the markets.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in for a live look at Bitcoin, the CoinDesk Bitcoin price XPX index currently trading at $47,163. Bitcoin is up almost 6% over the past 24 hours, and the CoinDesk Ether price ETX index is trading at 32.32. ETH also soaring almost 8% for the day. And the new DFX, CoinDesk's DeFi index, is trading at $701. DeFi also taking off over 9%. And just because we mentioned it, look at that massive green candle for Cardano, up over 20% over the past 24 hours, now trading at $2.51. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Joining us now to discuss the crypto markets is FTXUS President Brett Harrison. Hi there, Brett. Thanks for joining us. So, off the bat, what's your outlook? Great to have you. What's your outlook on Bitcoin amid these huge green candles I'm seeing everywhere?
As was said, it seems like the market is not too fearful of what's going on with the bill that's going through now that the House. I think what we're seeing between the various broad consensus that we've seen on the Senate floor to what's the commentary coming out of the Treasury, that we now see broad understanding that there are multiple different kinds of actors in the crypto industry. There's not just exchanges. There's proof of work validators, there are software providers, and not all of these are going to end up meeting the definition of broker, even according to the Treasury, most likely. And so we think that it's a positive sign that it looks like the correct actors are going to be most responsible for doing things like tax reporting, and that is a positive development for the industry.
So, Brett, have you noticed any pops, any changes in the mix of currencies that are being traded right now in FTXUS? And is there any difference between what's going on in terms of volume, not size, but mix in the US compared to what's happening at FTX.com as a whole?
Yeah, on FTXUS, we continue to see obviously strong volume in Bitcoin and Ethereum. We're also seeing continued and growing interest in Solana. A lot of DeFi apps coming out using Solana as an infrastructure. FTX itself being, a pretty big supporter of Solana. A lot of heat right now in the NFT craze, with a couple of NFT drops happening on Solana. So we're definitely seeing increasing volume there as well.
So last time we had Sam on our show, he was talking about how the U.S. is a real priority for FTX as kind of the next big geographical market. So could you tell us a little bit about the U.S. plan? Are you planning to focus more on retail investors or institutional investors? And also, how do you set yourselves apart from some of the big players in the U.S., like obviously Coinbase or Kraken?
Absolutely. So we have a couple of big strategic initiatives for FTX US. The first is absolutely to really go after that retail user base. We have this incredible platform that has been primarily used by institutions, your biggest trading firms, and we have close to 100% uptime. We have low fees. We have a great product, and now it's just about getting our names out there, and which is a big part of why we're doing a lot of these big partnerships. When you compare ourselves to someone like Coinbase. If you go on the Coinbase app and buy, $100 worth of Bitcoin, you're going to end up with around $96 and change worth of Bitcoin after fees and charges of various kinds. On the FTX app, you'll get around $99.50 worth of Bitcoin after similar charges. And so you're paying close to 7 times the fees on Coinbase. And we think that's really going to affect retail over time as they become more sensitive to things like fees. But in addition to the retail space, we're also looking into other kinds of regulated markets in the U.S., for example, stocks and derivatives, and hoping to offer a wider array of asset classes on our platform, more for traditional investors in addition to the crypto crowd.
So, Brett, is FTX.com going to implement the kind of KYC, know your customer procedures in place that FTX US has, which is pretty standard? Do you think that FTX.com will come up to your standards, or are you going to have this bifurcated level of KYC, one for US, one for overseas?
We actually implement the complete same standard across FTX US and on FTX International. We go above and beyond what's required in both cases. It's very important to us to make sure that people who are entering the platform, first of all, we know who they are. We know they're not entering the platform from a prohibited jurisdiction. We know that they are able to verify their identity. We do various anti-money laundering checks against them. And so we held ourselves to the highest possible standard across both platforms. There's actually very little to no difference between the KYC process between FTX International and FTX US.
Mm-hmm. I also saw most recently, and you talked about this, the FTX struck a long-term investment spokesman deal with Kevin O'Leary. Before that, you've also struck deals with Tom Brady, Gisele Bündchen, Major League Baseball, and the naming rights to the Miami Heat arena, which is now FTX Arena. So maybe you could talk about this latest partnership with Kevin O'Leary. What's the strategy behind these moves? And O'Leary himself is focused on green mining. So I'm wondering if FTX will only deal in green Bitcoin.
So we met with Kevin O'Leary down in Miami during the Bitcoin conference. He was looking to really get into crypto investing more and more. He was looking for a platform that he could trust, not just from a technological and reputational perspective, but also from a compliance perspective. And after that meeting, he realized that FTX would be a perfect fit for his objectives. And he's just a great spokesman. He has a huge following, a huge presence, whether it be through not just on television, but in general with institutional investors who really trust and look to him for advice. And so it seemed like it was a really great partnership. On the green front, FTX and FTX US are incredibly dedicated towards making sure that we are responsible actors in this industry when it comes to things like electricity usage, energy usage, and have launched a number of different campaigns in terms of purchasing carbon credits and other things to offset energy usage for FTX.
So as we were discussing earlier, there's definitely a lot of regulatory uncertainty in the United States, partly the infrastructure bill, but there are other potential threats on the horizon. From your perspective, what are your greatest regulatory concerns in the U.S.? Like, what are some things to watch out for that could affect FTX's business?
So the biggest thing affecting any U.S. exchange right now is the question of what tokens one can list on the platform. As you may know, if you want to offer securities to investors, one, you have to be a registered securities exchange, and two, the securities themselves have to be registered securities. You can't offer unregistered securities to unaccredited investors. Now, the question is, of course, which ones of these actual spot tokens really represent securities and which ones don't? And moreover, who has the jurisdiction and what jurisdiction to decide what exactly is a security and what isn't. And so one thing that we're seeing, comments out of Gensler and the conversations between Gensler and Senator Warren, and the bill that's entering the House now, is showing us that there is definitely going to be decisions on the horizon in terms of which agency exactly has jurisdiction over these spot tokens.
So Brett, speaking of jurisdiction, your competitor, one of the competitors of FTX is of course Binance. We talked to Brian Brooks several times about the topic of servers. So it seems he left Binance in part because of their when it came to transferring those servers to the U.S. There might have been some objection. Now, FTX obviously different company, but nonetheless, there's a similarity in that the FTX.com is based overseas. You're based in the U.S. Are your servers in the U.S. as well, or are they overseas? How does that work? And are you if they're not in the U.S., are you going to bring them into the U.S.?
Yeah, FTX US is run entirely in the US. It's run using US staff, US servers in a US Amazon cloud. So FTX US is already completely run inside of the US as a separate business than FTX.com. Now, of course, we're affiliates. There's some shared technology, but we are as separate of a business as we can be, especially in terms of server footprint and staff.
All right. And I noticed, Brett, you're a former Citadel securities executive. Were you doing any work in crypto during your time there? How is that experience related to what you're doing now?
No, it wasn't involved in crypto at all. Citadel Securities wasn't involved in the crypto space at all, at least when I was there. In fact, I'm pretty new to crypto. My only major experience with crypto was from some of my last days at Jane Street when they were starting to get into the space from the trading side. It was also around the time that Sam had left Jane Street to start Alameda. We had overlapped for a couple of years at Jane Street. And so while I had kept a watchful eye on the crypto industry before joining FTX US, FTX US is my first official career-based foray into the crypto world.
Congrats.
All right, Brett, welcome to the crypto world.
Thank you.
Thank you for joining us. Appreciate your time. All right.
Yeah, thanks for having me on.
That was FTX US President Brett Harrison. Coming up, checking in on Asia and the crypto market. And as well, we'll have Camila Russo, CEO of DeFi-focused media platform, The Defiant, and author of The Infinite Machine, a book on Ethereum.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 20th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, Coinbase partners with MUFG to launch in Japan. Users band together to take legal action against Binance. And the founder of Finder.com offers crypto incentives for COVID vaccinations. Let's get you up to speed from Asia to the world. First up, US-based crypto exchange Coinbase has partnered with Japanese financial giant Mitsubishi UFJ to launch in Japan. Coinbase says the launch forms part of its global strategy for expansion, and the partnership with MUFG, which has 40 million customers in Japan, will allow users easy access to trading using MUFG's quick deposit service. Japan has historically ranked very low in crypto adoption after scares like the Mt. Gox hack. But virtual currency deposits in the country hit a record high earlier this year. Question is, could this be the catalyst to drive this nation of super savers to embrace crypto? Forecast News' Lachlan Keller has more.
The launch could face a rocky start as Japanese exchange Liquid fell victim to a cyber attack on Thursday, with hackers stealing a reported $97 million in crypto assets. That followed hot on the heels of the Poly Network hack, which outstripped even 2014's Mt. Gox attack, with $600 million worth of assets taken. However, it could also be a sign of greater things to come for the Japanese crypto market. Indeed, attitudes towards crypto could be changing, with virtual asset deposits in the country hitting a record high of 1.4 trillion yen, or about $13 billion in March this year. That's an increase of almost 7 times the amount deposited in the same month the year before. Labelling itself a remote-first company, Coinbase has been actively hiring around Asia and recently announced an expansion of its presence in India. For Forecast News, I'm Lachlan Keller.
They say no risk, no reward. But for Binance users who were burned by the crypto exchange's outage earlier this year, are now taking matters into their own hands and have banded together to take legal action. The world's largest crypto exchange by trading volume suffered a massive technical meltdown on May 19th. The same day, the price of Bitcoin plummeted over 30% amid a crypto crash. The outage left users unable to trade and in the red when their positions were automatically liquidated. Some are now fighting back with the help of Swiss-based blockchain private equity fund Lewitinn Capital. Forecast News' Carolyn Wright has more from Hong Kong.
Angry customers have struggled since to resolve their dispute with Binance over the outage. Binance's terms of use stipulate that any claims are to be resolved at the Hong Kong International Arbitration Centre. Doing that is a costly undertaking, however. Just filing a case can set you back at least $60,000. But now Lewitinn Capital has stepped in. It provides funding for cases it wants to invest in by tokenizing shares in the company and paying out dividends when a case is won. Lewitinn Capital told Forecast News they will provide at least $5 million to finance the claim. Claimants just need to sign up.
We step in and we take on that cost and we take on that risk and we make it a fair fight.
Kay says there are currently over $20 million in claims of losses against Binance, and he expects more to come. For Forecast News, I'm Carolyn Wright in Hong Kong.
And finally today, the latest incentive to get a COVID vaccination? Crypto. That's right, the rather colorful founder of product comparison platform Finder.com, Fred Shibesta, is offering to do just that. The multimillionaire says any Australian who's had their vaccine since February 21st can apply for a reward of $5 Australian worth of Bitcoin. That's around $3.50 US. Why? Well, Shibesta says he's hoping it could persuade more people to get vaccinated, as well as offering the chance to get acquainted with cryptocurrency. All people need to do to get the reward is get a jab and sign up for the Finder.com app, which allows users to purchase and hold Bitcoin. Crypto for COVID shots? Either way, longevity is the name of the game for both. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Welcome back. All right, SEC Chair Gary Gensler warning that decentralized finance projects aren't immune to regulation. Gensler telling the Wall Street Journal that while some aspects of DeFi platforms may be decentralized, they can be highly centralized in other aspects. Joining us now to discuss is Camila Russo, CEO of DeFi-focused media platform, The Defiant, and author of The Infinite Machine, a book on Ethereum. Great to have you on the show, Camila. So, DeFi platforms reason that since they're decentralized, there are no middlemen, they can't be regulated. So Gensler is coming in and saying, pretty much, I don't believe in this decentralized theater. There are some centralized aspects of it. So it sounds like regulation is coming to DeFi. What do you make of Gensler's comments?
Well, I think I have to agree with Gensler in part. I think he's right to say that some DeFi protocols aren't as decentralized as others, and that makes them susceptible to regulatory risk. What I think the latest pressure on the regulatory front in the US will do to DeFi is just push it to be truly decentralized. So anywhere where there is a single point of failure and an ability for regulators to come in and crack down, I think these projects will start to move those centralized points to the community. So making their platforms actually non-custodial, decentralizing governance, having token-based decision systems, going fully anonymous, all these things, running smart contracts on chain permissionlessly, taking all these steps so that it becomes harder and harder for regulators to crack down. But I don't think that is going to ultimately bring DeFi to the mainstream. I think a friendly regulatory framework in the US will be needed, because ultimately DeFi platforms will need the contacts to fiat and to the regular or like traditional finance at some point. Like, people need to cash out, they need to bring in their dollars into DeFi. So you can't have this completely separate financial system. You need these bridges. And it's at these bridges that DeFi can be regulated and regulators can crack down on the space. So I think that, all this talk from Gensler and in the U.S. infrastructure bill, it has really catalyzed the DeFi space to mobilize and band together. There was just this huge response on crypto Twitter last week. Everyone calling their senators. There's DAOs forming to start lobbying in Washington, and we already have lobbying groups doing that work as well with Coin Center and the Blockchain Association. So I think this has really just like spurred people to action and to take a more active role in Washington, where DeFi has been a little bit absent. So I think it will be both. Like, DeFi will start to become even more decentralized, but there will also be a push for the community to get friendlier politicians and regulators in the US.
So you literally wrote the book on Ethereum. Ether's been doing really well recently. Recently had a very big news event, which was the hard fork. And it seems like, maybe coincidentally, but right around the time of the hard fork, or right after the hard fork, ETH started going up. And actually the market also started going up. Do you think that Ether is driving up other market prices, or do you think it's just coincidental?
It's hard to say, what is, moving crypto markets. I would think the biggest driver right now is macro, just the amount of dollars that are being printed into the economy is pushing all risk assets. There's just trillions of dollars being poured into the market, and those dollars need to go somewhere. So people are buying everything from houses to crypto and ETH. But I also think Ether's just fundamentals and as you mentioned, the London hard fork is also pushing prices. I mean, it's like a perfect storm of the macro environment plus fundamentals for ETH.
Hi, Camila. So speaking of pushing around prices, what do you think the effects will be on yields as Ethereum goes to proof of stake? What will be the effect on DeFi yields? Will it go up? Will it go down as everything tries to find its equilibrium? What do you think is the net effect on DeFi?
As Ethereum goes to proof of stake with the merge expected late this year or sometime next year, I think what will happen is that the yields from staking will become sort of like the similar to the U.S. Treasuries in the U.S. The staked ETH will become the safest yield on DeFi, on Ethereum, and that will basically allow investors to diversify their yield. So if you are an investor who wants to get the safest yield on Ethereum, you will be able to stake ETH and get returns that way. If you want to take some additional protocol risk, you'll be able to stake on other protocols or yield farm or lend your assets on lending platforms like Aave and Compound and so on. So I think what it will cause is to just diversify the risk profile that investors have on top of Ethereum.
Speaking of risk, is some of the publicity around the recent hacks that we're seeing in DeFi specifically, is that having an effect on overall yields? Is that going to have an effect on yields going forward and potentially affect the growth of the DeFi industry as a whole?
No, I don't think the latest hacks have an impact on yield. I think the biggest thing driving yields right now is crypto prices. So if there's a bull market and traders expect to make a lot of money lending and borrowing on DeFi platforms, yields go up because investors expect a bigger return from borrowing crypto on DeFi. If that expected return falls, then DeFi yields fall. So I think that's kind of what's moving that market. The effect on DeFi hacks, I think what it does is just, it really pushes developers in the space to find safer ways to build these protocols. So, there are things right now like decentralized insurance and different ways of making these protocols safer, like white hat groups coming together. Of course, the auditors. I mean, that's a great business there. I know they're booked for months to come. So I think the industry as a whole is just aware that for it to draw in a larger group of users, it needs to become safer. And so what these hacks do is just put additional pressure on the developers to do that.
Camila, a lot of developers who try to build on Ethereum feel it is too cumbersome, expensive, and slow. I know they're going to ETH to proof of stake, but could Ethereum lose out to Solana, Terra around the corner, and even Cardano, which is seeing a huge spike today because of their smart contracts developments?
Well, yeah, it's certainly possible. It's been kind of the claim that all of the new smart contract platforms make, that they'll overtake Ethereum with their lower fees and faster transaction times. And we have seen some activity on networks like Solana, Binance Smart Chain earlier this year. Of course, people will argue these networks are a lot more centralized than Ethereum, and so you can't really compare them. But I mean, I think there's use cases for all of these networks. So I think it's certainly possible. Ethereum's competitive advantage continues to be its larger community, and that's just really hard to replicate. And layer 2s aim to improve this high transaction costs and slow times. Confirmation times.
Speaking of communities, I had a chance to read your book, which was excellent, by the way. And awesome. In it, you describe the Ethereum community as quite a cutthroat community, in the beginning at least. And I'm wondering, is that still the case? What is the culture like now?
What do you mean by cutthroat?
There was a lot of infighting, and there was a lot of ousting of members in the early days.
Right. Well, I would differentiate from Ethereum's founding group to the Ethereum community itself. So the Ethereum community is, the developers and users of all the Ethereum-based protocols. So I think right now the community is really diverse. It just attracts people who want to build all sorts of applications on top of Ethereum. I think that's kind of the biggest difference I saw when reporting on the book, the difference between the Ethereum community and the Bitcoin community is that in Bitcoin, the community there was driven by the belief in this like censorless money and this like digital gold aspect to Bitcoin. So it's more like the libertarian, like monetary, like sound money aspect of the network. In Ethereum, because it's like a more flexible smart contract layer to build any sort of application, not just not just aiming to be peer-to-peer money. It just like attracts a more diverse community that maybe some are in it for this like sound money aspect. Others will be in it because they just want to build, different applications, games, DeFi, NFTs, and now with NFTs, the community has become even more diverse. I mean, we've seen kind of this inflow of artists and musicians and all sorts of different kinds of people that just like weren't present in the community before. I think it's been great to see that shift from a space that was mostly aimed at financial applications, and so it drew traders and investors to a space that's drawing artists and creators. So it's been great to see that shift.
Right, great. Well, very knowledgeable about DeFi and Ethereum. Camila, great to have your insights as always. All right, that was Defiant CEO and author Camila Russo. Coming up, we'll check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Happy Friday, Nick. So Binance has experienced a bit of a global crackdown around the world, but now they want to implement stronger KYC. Tell us about that.
Hey, good morning. Yeah, Binance announced last night or this morning that it would be rolling out a stronger KYC requirements across all of its users, so worldwide. Customers currently have until I think mid-October to withdraw their funds before they have to, make sure that they're in compliance. And if they don't, then if they don't withdraw by October, then they have to ensure that they have provided their ID and verify that they are who they say they are before the exchange will let them continue buying cryptos and otherwise using the exchange for anything beyond just withdrawal or basic transaction services.
So, Nick, what got them into it? What finally broke their spirit and made them do this?
So, it could be any number of things. Just this week, the Netherlands put out another warning saying that they're, questioning whether or not Binance is regulated to or allowed to operate within the country. We've seen a host of other countries, warn that they think Binance is either operating illegally or announce that they're investigating whether or not this is the case. So, there's been a lot of mounting pressure on the exchange for quite a while, and they've been reacting. They've been hiring compliance folks. They've been hiring former government officials or former financial regulatory officials to try and help them get into compliance and weather the storm. So this feels like just the latest step, possibly in anticipation of more such actions going forward. But it's definitely been, to quote CZ, a journey for them.
Nick, what's up for next week? What are the main things you're looking at?
Yeah, the House will come back on Monday, the House of Representatives in the U.S., and by Monday evening, they're going to begin consideration of the bipartisan infrastructure bill that the U.S. Senate passed last week. And I've been talking to a lot of folks. Most are fairly pessimistic that the House will be able to change the crypto tax provision within it, but that doesn't mean they're not trying. There's a lot of groups that are trying to get some sort of an amendment in there to narrow the scope of the tax provision to ensure that miners and other validators are explicitly excluded.
So, Nick, Brian Quintez is leaving the CFTC. What is that going to mean for the competition over regulation of crypto between the SEC and the CFTC?
Yeah, CFTC Commissioner Quintez, longtime crypto supporter, his stepping down at the end of August will mean that Democrats have a 2-1 majority on the CFTC as far as the top commissioners go, which will probably make it easier for the CFTC and the SEC to come together and say, okay, here's exactly what we want to see about this. There is this kind of I don't want to say it's a turf war yet, but there's been some hints that how the SEC is looking at crypto through current chair Gary Gensler and how the CFTC might have been looking at crypto diverge a little bit. So it's definitely going to be worth watching to see, whether or not this majority means anything for how regulations are actually issued and enforced, after September.
All right. Well, will be a big week next week. Get some rest. Have a great weekend, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter with our tweet of the day. And this one from Tim Harrison, the marketing director. The Cardano community is alive and well on Twitter today. He's saying, I think what many people don't understand about Cardano is the sheer scale of our ambition and our absolute determination to make it happen. But those who know, know. All right. Very happy for the Cardano community today. That's it for First Mover. Thank you, Emily Parker and Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.